right, so here we're going to start continuing on using customer statements. Now, customer statements is very, very useful, especially when we are looking at billing our customers, right? Especially when you want to let your customers know what's your status, what is your activity, and what is your account balance, right? So very, very common, especially for credit card companies that send you monthly statements, right? This is the same exact concept, right? Basically what you're doing is you're giving a list to all your customers and what bills that they have and etc., and giving and sending them copies of the statements and also a copy of their bill if they owe any money. Okay. Now, how do I create customer statements? Well, it's straightforward. Okay. On my homepage, right, I have this button right here that says statements. Okay. Straightforward. I can choose to create statements here. And if I even go to my customers on the menu, I can also create statements that way too. Okay. I can even do that if I'm in my customer center, but in this case, you cannot create it by using new transactions. They don't have it there. But if you do right click on any of these customers, you can create statements there. So this one only has 3 ways that you can create statements, okay? You cannot do everything all 6 ways, okay? You can only do it 3. So home page, menu bar, and when you go to the customer center, you have to right click them and then create those statements, okay? And that's it. So let's go ahead and create our statements. So again, the purpose of having statements is to send them out to your customers. So you can choose whether you want to do a monthly statement or, just viewing the, the each individual's account activity to kind of determine what kind of statement you would want to charge them. It is up to you, okay? So in this case, how would you set this up? Well, I'm going to start with the statement date. Because in this case, usually the statement date is at the end of a given month. So in this case, it's going to be March. The statement's going to be at the end of March 31st of 2021. And what is the statement period going to be for? We're going to make it from January 1st of 2021 all the way to March 2021. March 31st, 21. Okay, so therefore, I'm going to be releasing quarterly statements because maybe my services doesn't really necessarily have my clients coming in every single day, but maybe, again, especially if we do wedding photo shoots, grand openings, things like that, it's not something that you do every day, okay? So in this case, I think your book says right here that we're going to do quarterly statements, okay? Now, here is where I'm going to choose my individuals that I'm going to send statements to. So I can either select all customers, I can select multiple customers, I can choose just one customer if I really wanted to. If I wanted to just send it to Bob Mason, I can. I can also even do a customer type, so if you remember, right, what kind of customer group they belong to, or a preferred method, so if they want to do email. But in this case, I'm just going to go ahead and select all customers because I currently do not even know which customers have account balances, okay? So then on the right side is going to be your means of filtering your customers. So very first top part here is going to be selecting additional options. So templates, I want it to be the Intuit standard one just because there isn't any other one, okay? Next one is going to be create one statement per customer. Yes, why would you create multiple statements for a different customer, right? That should be it. It should be creating one statement per customer, okay? So then now down here is going to be where you're going to filter them. Number 1 says show invoices, items, and details. Yes, because you don't want a customer to call you back and say, you're sending me a statement with only the amount that I'm being charged. What are the details and items and the services that you provided? Well, here you go. I want to put as much details as possible. So this is why it's so important for you to fill out that memo, because that memo section will reflect what you have written on into the your customer statements. Okay. Do I want to print statement by billing address? Okay. Zip code and stuff. If you want to, you don't necessarily need to print statements by billing address. In this case, if you want to, you can. If you, it's not optional. Okay. Now, do I want to print the due date on the transactions? Yes. They need to know which ones that are due, because if they have multiple open invoices, right, it'd be good to print out their due dates on each one. Okay. Now, here's a section where it says do not create statements for. All right. So this is where, again, you're filtering out your group of individuals. Do you want to create one? I do not want to create one with anybody with 0 balances. Yes, because do not create one with 0 balances. Why would you need to bother your customers that don't have any account activity with you? You definitely don't want to create one for that. Okay. Do I want to create one with an account balance less than? No, I don't want to. Okay. Even if it's less than, $5, I'm not going to bother them. I'm just going to send them a bill. So don't need to have a statement necessary. Okay. And then, do I need to have one with no account activity? Of course. Do not create one with no activity. So if they are somebody who's in the past that paid off their bills already, and it's fast forward a month later, you don't need to send them one. Okay. And last but not least, do not create one for inactive customers. Yes, please. If they're done with you, do not bother them with a statement, because they're going to just open up the letter and see why you're charging them $0 for. So again, it's a waste of paper, and it's unnecessary. Okay. So again, there you go. I made sure I went through all of this. So now I need to see what my statements look like. So what I'm going to do is I'm going to click here, preview. Okay. Once I click on preview, you should see an overall overview of the statements that are visible. So I should have like 1, 2, 3, 4, 5, 6, 7. So again, as you can see, right, we did Ron Berry for his membership due. We did who's this? And if you want to see more details, you just go ahead and use your little mouse and click on here. So this is Maria Cruz. She has lots of activity with us. Okay. This one is Bob Mason. So once again, Bob Mason is one of those customers that have a lot of outstanding activity, right? Okay. So as you can see, because I wrote that each transaction should have details, here it is, right? It gives me all the details in what that invoice did and what the services are and what products we sold. Okay, so it's in detail description, and if you look very carefully, like, it looks like a regular statement, right? You got the customer's information at the top, you got the amount of their account number and the amount due, and even down below here gives you how many that are due now in 30 days and so on and so forth, right? That you give them the statement dates, and you get a grand total of $801. So again, it does show payments and things like that. So again, account activity. Okay, so again, that's an overview. And then again, if you're ready, you can go ahead and print them out or mail them, however you want to do it. But again, if they do not choose to be mailed this, like in the mail, you can do digital, right? They have a button for you to go ahead and email these statements right here, email. Okay, so again, very universal, very flexible. Okay, any questions there?
No.
Okay. Now, usually, rule of thumb here is that when you do have these accounts, right, there's always that, agreement terms, right? If you are going to have an account balance, right, you could be subjected to, charging your customers a certain interest fee, okay? And yes, that's very common, especially with those individuals or companies that have, credit cards or store credit. They give you that description saying, hey, you don't have to pay all of it at once. We can finance for you, and you can make monthly payments. But if you do that, the agreement terms is you could be charged up to anywhere from, I think nowadays it's like 24 or even 28% interest, if I'm not mistaken. Yes, and if you are going to be choosing to do those monthly charges every single month, this is where you are also going to be able to do as well. Right here is called assess finance charges. Okay. If I click assess finance charges, now it tells me I need to set it up first. Okay. And I click OK. So it's going to take me to my preferences, right, under finance charges. And what I'm going to do is I'm going to set up how I want to charge my customers based on the account balance that they owe me. So in this case, right, I need to take a look. I want to charge 10%, okay, interest, okay? So what is the annual interest rate, right? 10% is pretty low, but that's, that's what it says in the book. Okay, so 10%. Okay, 1. Okay, so I want the percentage, so 10%. Okay. What is the minimum finance charges? So in case they do not have an account balance and I cannot charge that 10%, what is the minimum amount that I am going to charge? In this case, it says right here, you're going to charge $1. Okay. You're going to charge $1 to be the minimum. Okay. Do you have grace periods? So in this case, do you give them a few days to when they receive or miss their payment? You give them some grace period. In this case, they say no. I don't want to give them any grace periods. But for those who are very nice about it, maybe they forgot their to pay for their bills, etc., etc. Are you going to give a grace period? That's optional if you choose to do so. In this case, no. I'm going to keep it at 0. What is the finance charge account? In this case, right, it becomes interest income to us. Okay, because again, those charges, right, is us generating extra money in regards to, it's us generating extra money on top of what these clients owe us already. But in this case, we have finance charges, interest or income. Okay, and then let's see what else we also have to have here. We got to also verify. Okay, so let's see. We want to charge and calculate them on the due date, so everything looks good there. Make finance charge invoice to be printed. So yes. Okay, so then when I print out my forms, it's going to show my financial charges. Okay. and I click OK. So now it's going to pull up all these individuals that have outstanding balances, and these are their finance charges. So again, because I'm charging 10%, if someone owes me, for example, Miranda's Corner owes me $1,000, 10% of that is going to be $119. So again, every individual is being charged. Now again, and if you have a minimum or maximum amount of ones, you can modify them, saying, well, if this person is just like for example Ron Berry, they're just membership dues, you don't need to charge them interest on membership dues, right? They're just, if you choose to do so. But for those who actually have actual account balances, that's where you are going to make sure those financial charges do go through. So yes, you can edit the information if you like. So in this case, is it necessary to charge them $2.36 for a membership due? Well, I mean, it's it's subjective. Do you need to charge interest on top of that? Okay, so that's that there. Again, we put a threshold. The minimum amount of charges is $1. So if each statement balance is over $1, they would charge the interest right then and there. Okay, but if I wanted to do the threshold saying no, only $25, the minimum is $25, then all of these would have zero balances for just those membership dues. Okay, so once everything looks good, right? Everything all the statement charges are good and they are to be printed, marked invoices to be printed. Okay, then we can go ahead and select them all and go ahead and proceed forward. So you can also, if you don't want to charge this individual like Ron Berry, I can select those individuals. So no to Ron Berry, okay, and no to Tim Fang, and no to Jerry Perez. Okay, only the individuals with a large amount of account balances. So again, we have Miranda's Corner, we got Bob Mason, and we have Maria Cruz. They have the largest account balance, and they need to be charged that financial charge. And once I'm done there, I can go ahead and click Access Finance Charges. So again, now that I did that, if I click my preview again, those statement charges would be applied onto the invoice. Okay, for this is Maria Cruz. Okay. All right. Then we got Bob Mason. Bob Mason. Okay. And usually it says it at the bottom. So down here. Okay. But other than that, that's how you finance statement charges. So for any reason that you need to charge interest, because that's the agreement terms on overdue balances, that's what you have to do, and you have to apply them on to the customer statements. Any questions there?
No.
Okay. So I'm going to close this window. All right. So the next section in your book, let's see what it talks about, is going to do customer communication. Because we are living in the great technological world, everything is just more easier and everyone's more connected to their phones and their emails and so on and so forth. So what you can do is you can create or use some kind of form of communication to your customers by sending mass emails or etc. Okay, in this case, if you are going to have this type of this type of setting where you're going to have the options to email your customers. So again, whether you want to send marketing materials or let them know your weekly ads, or if they sign up for your email, like what content would they get, or you can use this to send statements, invoices, as well as payment reminders. you can do that through customer communication. Now again, it's not for everybody or for every single company, so doesn't matter. I'm going to skip over this section just because again, it's if you do want to use email as a form of communicating with your customers. So it is going to be definitely useful, especially because again, we are living in a technological world. A lot of stores out there always say, "Oh, sign up for our email newsletter," right? Our weekly ad comes through the email, or so on and so forth, right? If you choose to do that kind of type of business where you're going to have using email as a marketing tactic, then this section is for you. Okay, I'm not going to go over it just because, again, it's only optional if you choose to do so. But it's really cool because you get to create your customer groups that are strictly email only, and you can set up your emails, and you can even type in the message right there, and it will email it. It will mass email to every single individual that is listed that you select as your group. So in this case, yes, right? And usually, again, it's usually weekly news ads and so on and so forth. Okay, so you have that section, right? Last section we're going to talk about today is going to be sales tax, right? We finally saved everything up to sales tax, which is today, okay? So I'm going to show you everything that you need to know about sales tax, how to set it up, how to collect the sales tax, and how to pay those sales taxes, okay? So first things first is, how do I set up sales tax? Well, straightforward, right? We are going to go ahead and go into, first, we're going to go to by setting up our sales tax codes, okay? Now, we talked about sales tax codes, right? We talked about what this code do and what does it really mean, okay? So sales tax codes, right, allow you to determine whether an item is taxable or not. So in this case, right, we have 5 sales tax codes that you can go by, right? You got tax, which is going to be for those taxable items. You have services, because again, those services are non-taxable, and so on and so forth, right? If you're a grocery store, right, you're gonna have one for alcohol tax. You're gonna have one for food stamp tax, right? You're gonna have one for foods in general, right? Uh, you know, perishable goods, they are non-taxable, right? But other products other products that you sell in the store are 100% taxable, okay? So again, there's many reasons why you need to set up your sales tax code, and you need to do this before setting up your sales tax, okay? So again, I have one for all my products that I sell in my store. I'm going to use that tax as my sales tax code, and I'm going to use service, if I provide a services, for my non-taxable items, okay? So then now I can go ahead and set up my sales tax, okay? There are a couple ways that you can do it, and it's definitely going to be going through the preferences. But what I'm going to show you here is there's a one-stop shop place that you could go to be able to manage your sales tax all in one go. And that is right here on your vendors area right here. Right here says manage sales tax. Okay, so I can manage my sales tax right here. If I go to the vendors tab up at the top of the window here, I'm also able to manage my sales tax through here as well by clicking sales tax, and then I can either create a new sales tax, manage sales tax, pay my sales tax, and so on and so forth. But the best way is to let's go ahead and go manage my sales tax. So there's only 2 ways that you could do that. It's not going to be on the icon bar. They do not have it on the icon bar. It's either on the menu or the home page. Okay, so let's go ahead and click on manage sales tax, and then you're going to get this little window here. Yes.
So I lost here. um, what do you mean when we manage the tax? Is it um, like when we put something, it's just take the tax immediately, like direct?
In this case, what you're doing is you're setting up your sales tax. That's what it means to manage your sales tax is to for those there's three things, right? You need to
Mm-hmm.
create the sales tax, which and then you need to determine what items are taxable. Second is you need to collect it. Third, you need to pay it.
Okay.
That's in other sense of managing your sales tax.
I thought we put the tax, how much they need to take from us.
Well,
Okay.
to make it easier for you instead of having to go there and manually calculate over there, this is how we
Okay.
can make it that much more easier and have it already done for us automatically.
Like what it will be give us just the tax, like expenses.
Tax is not an expense.
No, it's like how like when we do it, like it's gonna be give us the tax, like how much we pay just for the tax.
Correct. And this is how, if we set it up through this little window, everything that has to deal with tax will be done through here.
Okay,
So
thank you.
again, tax is it's not our money, right? It's the government's money. It's our means of our agreement to be able to operate our business within the state and the city and local agencies, right? This is how we can do business is by collecting tax, and our duties as being a business is to pay those taxes for the items that we do in the state and city, right? To provide, right? So then it's a means of the individuals, the customers, they pay into the tax through sales tax, and that tax money goes to the state and to the local aid to the local government. So this is our duty as a business is that because the customers are paying us, we need to take that money and pay the government because that money doesn't belong to us. It's our agreement for doing business is that we're collecting the sales tax for them and then sending it to the local state and local government. So in this case, that's our agreement. In order to do business, we must charge sales tax. So how do we set it up? So once again, once you click on manage sales tax, you have a few areas where you could right here set up sales tax preferences, right? You're also able to pay your sales tax. And I do recommend you to go ahead and use this to make payments because do not ever use write checks. Okay? But first, let's talk about setting up those sales tax. So I've mentioned before, right? You definitely need to go since it's a preference. We are going to be in the sales tax preferences in your company file, okay? And in this case, that's why you need to set up your sales tax code to determine which items are taxable and which items are not. Because by doing so, when you create your invoices and you create your sales receipt, it's going to automatically say, boom, this is what you're going to be taxing for this item. All right? So everything that you put into QuickBooks makes it that much more easier to process and fill in a lot quicker instead of you have to manually calculate the sales tax by yourself. You have these pieces right here. Okay? So once again, preferences, do you charge sales tax? We already selected yes. Okay? So now we need to either figure out what we're wanting to do here. So in this case, what is the sales tax item that you frequently use? In this case, because we have two store locations, maybe we don't frequently use one or the other as much, right? That is something that I have to change on my own because it depends on what store I sold my item at. If I sold it in Walnut Creek, I will put Walnut Creek. If I sold my item at San Jose, I sold it in San Jose. If it was out of state, I would choose out of state. So in this case, which one's the more frequent one? In this case, I'll go ahead and just say Santa Clara, right? San Jose is my bigger location. Okay. Other things that you need to do is here, how do we assign sales tax codes? Well, what kind of code did you use for taxable items? We already said, right? We use tax for taxable items. What about non-taxable items? We frequently use service. Okay. And then other than that, how often are you going to make payments to your taxes? We'll do it either on a month or quarterly basis. Whichever one, if you're having sales every single day, you should do it every month. But if it's something like this kind of business where you don't really get sales all the time, then you're safe to do it at the end of the quarter. Or if you are one of those businesses that have seasons, so you only open up for business for one season out of the year, then you should be okay doing it at the end of the year. Okay, but most cases it's better to do it as a monthly basis. Okay, and of course it's going to be as of the invoice date. Okay, so that's what you're going to be doing. Whatever is stated on the invoice is what you're going to be collecting. Okay, so everything looks good. I'm going to click OK. So now I set up my sales tax preferences. Now, if you actually notice, what had happened here is it says you need to set up your sales tax item. And that's exactly what we're going to do next, because now we set up the way my profile is going to be taxed, right? Now I need to find a way to collect my sales tax. So first off, I need to create what's called a sales tax item. Okay, so again, right here under items and services, I'm going to click that on my home page, and once again, my items list is going to have everything that's in regards to my sales process. So whether it's I'm selling a product, service, or charging tax, this is where I need to set up my actual sales tax item. So as you can see here, we have 3 sales tax items, right? One for Contra Costa, one for Santa Clara, and one for out of state. But in this case, I'm going to show you something that's more relevant, and that's for here, for the state of Nevada. Okay? So I'm going to go ahead and click new, right? So I can show you how to create a sales tax item. Okay? Now, as you can see, right, we have 10 options, right? You have either a sales tax item or you have a sales tax group. Sales tax group items is only used if you pay more than one agency. Now, if you did not know this, sales tax is comprised of 2 different taxes, right? One is the state, and the second one is the local state, local city or agency that you are doing business in. So a great example is if you go to California, right? You charge something in Orange County, has a different percentage of tax if you were to charge something in LA County, right? Because the state will charge a specific portion, but the local cities will also have their own separate taxes as well. So again, even though they're in the same state, every local city will have a different tax on top of that. So that's what I'm going to show you here, is that if you pay more than one agency, so if I have to pay my state separate from my local agency, so for example, right, if I have to pay, for example, I don't know, Bakersfield, right? Bakersfield, California, I have to pay it. I have to pay my taxes, or I have to pay my state to the Sacramento state, and then I have to pay my own Bakersfield local agency a separate tax. Then yes, that's how it works. Then you need to use a sales tax group. Now, in order to create a sales tax group, you need to create the individual sales tax item. So I'm going to show you this. So for example, let's say I do pay 2 different agencies for my Nevada state tax, right? So in this case, sales tax name, I'm going to call this Nevada state tax. Okay? And okay, it's going to be sales tax, which is right. And then what is the sales tax rate going to be? Well, in this case, sales tax in the state of Nevada is 4.6%. You guys are probably thinking, huh? That's not right. It's 8.375. No. You need to understand you pay the state and the local differently. So let me just show you this and it will make sense when we do the sales tax group. So the state's going to charge me 4.6%. Okay? And what is this sales tax agency? Well, in this case, I'm going to call this Bureau of Taxation. I don't know. All right? It could be any of them. Okay? Ooh, I think I clicked, I just want to do a quick ad. So let's do, what was it again? Bureau of Taxation. Okay, quick ad. Okay, and now once that looks good, I'm gonna click OK. Okay, now, so there's my Nevada state tax. I'm gonna go ahead and create another new sales tax item, and I'm gonna call this Clark County, right? Because we belong in Clark County. Las Vegas belongs to Clark County. Clark County. How much does Clark County charge me? Well, right now they are at 3.775%. And what agency do you pay? In this case, I'm just going to use whatever the book says, State Board of Equalization. Okay? And I click OK. So now that I have my two separate taxes, right? I have one for the state of Nevada and one for the Clark County. So then now I'm going to go ahead and create a new sales tax item. And I'm going to call this my sales tax group. And you know what? I can even call this Las Vegas, City of Las Vegas, right? And what does this item have? Well, it will include Nevada State, and it would also include the Clark County. Okay, and look at this. What do I get? I get my 8.375%. Isn't that what I wanted? That's what I'm going to be charging my customers if I do business in Las Vegas. All right, and I'm going to click OK. All right, so now I have my individual, my taxes ready to go. So how do I collect it? Well, all I gotta do now is I have to create an invoice or create a sales receipt. So let's do a sales receipt just because it's, again, easier. So let's say Bob Mason, okay, decides to buy something for me and he pays using cash, and let's say he bought more photo paper from me, okay? Because photo paper is going to be considered a taxable item right here, your sales tax code is, it's taxable. He does not get a discount on this. It's not a service. It is a taxable item, which we set up to be in each item. Okay, so there you go. It's taxable. And because it's taxable, right, let's go ahead and take a look down below. It's saying I'm going to charge him for Santa Clara tax, which is 8.25%. I say no. This is where your sales tax items are created and they get placed into this section right here. Well, no, I'm not going to charge him that. I'm going to charge him Las Vegas. So right here it tells me it's 8.375%. So therefore, I'm going to charge him $1.04. Now, what if he didn't buy just only one from me? He bought 10 of them from me. Then it's going to multiply, and it's going to tell me that now he owes me $10.36 to tax. Okay? And then I'm going to go ahead and say, because it's going to the state of Nevada, I'm going to go ahead and click Save and Close. And, yes. Okay? So now that we already done that, now how do we see where the money is going? Well, you have a few options. You can either check the agency that you selected what that was going to be collecting your sales tax money, right? I said I had two. I had Bureau of Taxation, which is here. And notice this, I got $5 in it because I said the state only charges 4.6%. And the rest went to the State Board of Equalization. Okay, in this case, if I, okay, don't double click. That's just to edit the profile. But right there, it tells me that I have this much amount. Okay, so if I want to make a payment, in this case, I don't need to know anything more than what happened here, right? I could just simply go to the invoice that I charged that individual person and take a look at that. You don't need to calculate because you already told QuickBooks to do it for you. You already said that this is the separation, so that's why they're in two separate accounts. Now, right, that's how I collect my sales tax. Now, how do I pay for it? I must go to manage transaction or manage my sales tax, or I can go up to the vendors tab on your menu, click on sales tax, and you can pay your sales tax. But I like to come over here and do it manually in the manage sales tax. Now in this case, do not write a checks to pay for sales tax. QuickBooks, yes, it's a program. But the thing about a program is it has a sequence. It has a line of direction. You cannot put loops and things in there for a program. That's not what a program does. It does not work like that. It's straightforward in one line. So in this case, I cannot write checks to pay for my my state equalization or anything like that. And I can even do that. If I were to do that and say, yeah, I want to pay my taxes, right? Okay, so this is for checking, right? And let's say I want to pay my State Board of Equalization. It's going to stop you and say, no, 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 no. If you're trying to pay for taxes, don't use this. It will tell you like that. And I click OK. All right. So if it warns me like that, then don't do it. So in this case, I must use the actual pay liabilities or pay your sales tax form right here, which right here I can click pay my sales tax. So if I go ahead and click pay my sales tax, what's going to happen is it is going to send me, well, I got a couple of them that are due right now. So if I were to go ahead and take a look at what my due dates are, so show sales tax due on. So right now it's due on the 31st, but let's say I wanted to show me due on, I don't know, March. So nothing is due in March. We got a State Board of Equalization. I'm looking for the Bureau. Okay. So you could choose to pay all taxes, or you could choose to select one at a time. Okay, so there you go. You have, you could choose which one you want to select. But in this case, I'm going to pay all of them. So we're going to pay the Nevada State, and we're going to pay Clark County, and so on. So here's the Bureau of Taxation. Okay, so we're going to pay all of them. Okay, on, it doesn't matter when you pay. Right? And I'm going to click OK. And boom, that's it. Because what we're doing here is when we made a payment to these taxes, right? We said that it's going to be checking, and we already set up the vendor who we're going to make payments to. So in this case, that's all you have to do. And most cases when you have sales tax like this, they are 100% going to be using the EFTPS, which is the electronics electronic federal payroll, I think something tax payment system, not payroll, sorry, tax payment system, which is PEFTPS. Okay, it is electronically. You don't need to write a check. You don't need to do anything. Everything is electronically. Okay. And that's the cool thing about that. Or you could choose to actually send a check if you would like. But in most cases, they are EFTs. So you don't need to send a check for $4.95 to the local agency. You're better off just transferring that money. Okay? And then watch this. Now that I just created that transaction, what happens when I go to my checking account? Okay, you're going to see that you just paid your sales tax payment right here. Sales tax payment, or it says right here, tax payment. You paid the State Board of Equalization. Okay, and that is what you have to do. You cannot use write-a checks. As I've showed you before, it will give you a warning sign saying no. Okay, so again, that's what you have to do to pay your taxes. So any questions in regards to setting up taxes, collecting the sales tax, and paying the sales tax?
No.
All right. Last section we have in chapter 3 is going to go over sales report, and I already went over that with you yesterday. Okay. What is significance about the sales reports? Well, it just depends on what question you are asking in the company. So that's the purpose of having reports, is you want to ask a question that's in regards to the company, right? How are you going to answer that question? Well, what is the question that you're asking? It's pretty straightforward, right? If you're in the sales position, what if your question was, how many items do I actually sell? Well, in this case, you're going to run your report for sales, and you're going to do sales by item. Do I want a summary or do I want the detail? Maybe I want the detail to show me which invoices, what items do I sell, and here it is. This is for just this fiscal year. But if I want it for all, there it is. Okay? Every report answers a specific question that you have in regards to the company, but that is also in regards to the position that you have into the company. So if you are in the position for HR, right? If you're trying to pay your employees, sales reports does not answer any question that you have, okay? Because in this case, you're going to be asking questions, okay? What is my total federal taxes I have to pay? Well, then go run a federal tax report, all right? Or run it's called the federal liabilities taxes report, where you can see all the taxes that you have to pay for having employees. But that has nothing to do with sales. So again, each chapter is going to be broken down into specific topics or criteria. So in this one, it's all about your customers. It's all about the sales. So in this case, that is what this question is asking, is anything that has to do with sales. Okay? And we already went over it yesterday very briefly. Okay? So that is it for chapter 3. Okay? Tomorrow will be the last continuation portion of your customers. Okay? And then Thursday will be review. So let's go ahead and, if you don't have any other extra questions, let's go ahead and answer the review questions. Okay? Starting with the very first one, right? We're going to be selecting the best answers for each of the following. So, number 1, customer statements. What does it do? Let's see. A. Good, right? It provides a summary of all the accounts receivable activity for a customer during a specific time period. Yeah, specified. Okay, good. Number 2, okay? Which of the following options is not available on the available credit window? So again, not available.
D.
D says use with receive payments. Correct. You can never, and even if you do this in real life, if you get a credit, you cannot ever use it for a bill. You cannot use it to pay for a bill. Okay? So in this case, there was never an option for you to use it as a form of payment. Okay? It's either they give you a refund, or they let you keep that credit for a future invoice, or they let you apply it to the original invoice. Okay? Number 3, okay, I circled this one because this one is a confusing question. It says, delete the original invoice
I'm not sure, but my answer is A.
Okay, anybody else?
I think it's D, as in David.
There is no D for question 3.
I'm sorry.
Okay, so in this case, right, so let's take a look at A. It says in order to basically say delete the original invoice by creating a credit memo using a bad debt item and then apply the credit to the past due invoice. In this case, that doesn't delete the original invoice. Okay. What does B do? Create the credit memo for the amount of the past due invoice and then retain as an available credit. In this case, does that delete the invoice? Not really. And then, of course, C says any of the above. So in this case, I put a question mark on this one because it is like a half question. It's not really a question, and the answers do not make any sense to this one. But they said the correct answer is B, which is really weird because we don't even understand the question. So in this case, if I were to reword it in a way where that will make sense, would be which is not the available or the correct way to delete an original invoice, and that would be by you selecting B, right? Because you don't when you do create a credit memo for the total amount for the past due, you don't retain it as a credit, right? You would do letter A, which is create the credit memo and apply it to the invoice. In this case, if the question was to say which one is not the correct way to delete or the original invoice, then it would be B. All right. So again, this question, I would throw this question out, but I just went over it just in case you might see a similar question. Yes.
Not the correct way to delete
Uh-huh.
an invoice.
That'd be good.
Would be
It'd be
B.
B.
Okay.
Okay, number 4. Okay, which of the following situations would you create a credit memo?
D.
D, any of the above, right? You need to record a cancellation order. Good. And then the second one says a customer decides to return merchandise. And C says when a customer requests for a refund. Yes, in all 3 scenarios is when you're going to be creating a credit memo. Okay. Number 5, the credit memo number should be D, right? The same as the invoice, but with a letter C followed behind it. Now, in this case, it just says should. It doesn't say is, okay? So should meaning it could be, it has to be, but is it obligated to be? No. You absolutely can create your own lettering format just to keep yourself even more organized. So if it's a refund, I'll put an R. If it's a discount, I put a D. If it's a like an actual credit, then I put a C. If I like retain it as a credit, I put it as a C. If it's a bad debt, I put a B, right? You can make whatever coding that you like, but in this case, they just say it should be in relations to the invoice that you are making connection with, and it should follow with AC. Okay. Number 6, okay, you need to issue a refund to a customer, okay, but the customer originally paid with a Visa card. How do you issue this credit?
D.
D, you pay the refund through the customer credit card. Yes, right? Right, but there, remember, if you remember this section right here, you do have to have one or the other, right? You either have to pay the services for QuickBooks payments, okay, which will automatically do the work for you. They will take that amount and they will credit it back into that individual's account. If not, you would have to manually do it by depositing it through your QuickBooks and calling up that company and letting them know that you are needing to make a refund to this individual. Okay. All right. Number 7. Okay. Your company policy is that each finance charges should be at least $5. Okay. Where is this best placed? Okay. To set this value in QuickBooks.
B.
Right, that's correct, right? You would place the $5 in the minimum finance charge field in the finance charge company preferences, which is going to be by going through the tax and so on and so forth, right? Your company preferences, okay? Number 8, okay, which report would you run to see a summary of the income by products and services?
Is that A?
Letter A is 8. Yes, right? You would by clicking the sales by items report. Okay, good. So, number 9, right? We have which of the following is a way to issue a credit?
C.
Let's see. Letter C for number 9 is correct, right? Yes, you would by creating a credit memo, right? So which of the following way is to issue a credit? So straightforward, right? You just issue a credit memo. Number 10, okay, which type of business would most likely use batch invoices?
A.
Right? A gym club, right? Who has monthly membership dues that has to be paid. Yes. Not a home builder, right? They don't need to charge you every single month unless they're doing, progress invoicing, okay? Which we'll talk about in tomorrow. Accounting and tax businesses, once again, they're usually a one-time fee, and a retail store. In this case, no, retail stores do not need to have memberships. Okay, so A is correct. Number 11. Okay, a past due invoice. Okay, contains items that were taxed and then items that were not taxed. Okay, how would you write off this invoice as a bad debt? Okay, if you have a taxable item and a non-taxable item, how would you write this off as a bad debt?
Is it C?
It is C, right? You would create the credit memo with two bad debt items, right? One for the non-taxable items and one for the taxable items. So I did show you an example in class, but not using bad debt. I used the allowance for doubtful accounts. Just to show you an example, what do you do when you have taxable items? You just create the item, right? And make sure you select whether it's taxable or not taxable. So then you can calculate the correct amount of tax that you have to write off, right? And it's going to undo the tax for you. Okay? You don't need to manually do it or calculate it. Number 12. Okay, which statement is true?
D.
D, you can create statements for single customer. Yes, you can. All right, let's take a look at the other answers. If you assess finance charges, okay, for one past due customer, you have to assign or assess them for all of the customers. No, that's not true. If one person has an account balance, why would you charge someone who doesn't have an account balance a finance charge? Okay. Now, letter B, you must preview statements before printing them. It's recommended in case you make some mistakes here, or if you accidentally charge finance charges to somebody. But you definitely want to make sure you do preview it, just in case you forgot to check mark that you don't send customers with account balances money, right, or a statement, right? If that's the case, then you should definitely always preview your statements before printing. Okay. And then C says finance charges are assessed automatically when you create a statement. No, you have to manually assess them because every single situation could be different, right? In this case, when I did my example, right, I had to check mark that no, certain people do not need to be charged charges. Only a few selected people needs to, and you have to do that manually. You cannot, it's not automatically set for you. Okay. Question 13. After issuing a refund check,
Is it C?
C, let's take a look at C. The original invoice is marked refunded, and the remaining credit field is 0. In this case, what if they don't refund everything?
Oh, okay.
Mm-hmm.
So wait, would it be A?
To create the credit memo is marked refund, and then the remaining credit field is 0. So in this case, yes, it would be A, right? Not the original invoice, but the credit memo will be issued as 0. Okay, so that's one thing you need to know, not the original invoice, because what if you didn't return all the items? If you didn't return all the items, then your original invoice is going to hold its original value, right? It's going to stay the way it is. It should be. In this case, this is talking about the actual credit memo itself. Whoever is that, please mute your mic. Number 14. Okay, which of the following is true?
It would be C.
C, create the memo, a credit memo looks similar to invoices, but they perform the opposite. Yes, that is true. Okay. Last question of the day is question 15. Okay. Which of the following situations would you create a customer group?
Good morning. My name is Mark. part from Summerlin Hospital. My direct line will be 702-894-56.
So, question 15, which of the following situations would you create a customer group?
D.
Letter D says any of the above. Let's see. That is correct. So let's see. A says you want to send statements to customers with open invoices. Yes, if they have the option to either choose an email, you can select those individuals, create a group, and use the customer communications to send over statements, okay? Or if you want to send notifications by email, that works too, right? Again, you can send payment reminders. And letter C says you want to take action for vendors based on whether they apply to specific criterias. Okay, sure. So if you need to send a mass email to your vendors, then go for it. Yes. So in this case, D would be any of the above. All right. So any questions in regards to chapter 3?